three big IT companies or three bellwether IT companies, they will be coming out with numbers on the same day, and the market will be reacting to these numbers at the same time, which is tomorrow morning. Look, the numbers will be good, and we know that, you know that, markets know that. Accenture number in a sense have indicated to us that what is in store for IT companies. IT companies are going through what is called as a multi-year cycle, and multi-year cycles do not end with just 12 months or 18 months. So the landscape, the big picture, the entire lay of the land, I think is very encouraging for IT. The question which we need to debate and understand is that what kind of re-rating and what kind of price action we should anticipate in 2022, because in 2021 it was not TCS, it was Tech Mahindra which did well. It was a comeback in Wipro more than a comeback in Infosys. So the bellwether stocks, which is TCS and Infosys, while they did well for themselves, the real outperformance came in a Tech Mahindra. The real outperformance came in the L&T Infotech, L&T Twins. The real outperformance came in some of the mid-tier IT companies. So will we get a convincing answer post this earnings season that one should lean towards more IT, more towards mid-cap IT, or it's time to come back to large cap IT companies which are promising you growth, perhaps a slightly lower growth, but that growth is coming at attractive valuations. Now, to summarize today's big things to watch out for, look, TCS has disappointed. Q1 was not that strong from TCS. Q2 was not that strong. So while TCS may continue to command its that P multiple, bear in mind that TCS has disappointed. Another quarter, if TCS disappoints, then markets would say that, hey, hold on, it's a Tata company, great margins, thank you. But are there any other better options? So that's something which I think markets would seriously debate, because today, by the end of the day, there would be a relative case to compare TCS on the same day with Wipro and with Infosys. Wipro, I think, really could be the dark horse, because the new management has really changed the entire process, thought, and the entire organizational restructuring of Wipro. It is still relatively cheap. So can Wipro really be the dark horse? Infosys, I would say, is somewhere in between. It's not as expensive as TCS, it is not as cheap as Wipro, but if they are able to convince the market that, look, they will be able to come to industry beating margins, they can come and up their guidance, then it becomes a different kettle of fish. So you'll have to look at each company separately, but TCS has to deliver this quarter, and Wipro in a sense could be the dark horse. But by the end of the earnings season, I guess we will find out whether which end of the IT space needs to be overweight in your portfolio. Last year, if you bought Tech Mahindra, you hit a home run. If you bought L&T Infotech and other L&T stocks, you hit a home run. So which part of the IT chain you need to be overweight on, I guess we need to now decode that.